Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. How we doing in YouTube? Sorry about that. I don't know how far, where did I drop out, guys? Oh, that's good to know. Okay. Well, welcome to the Traders Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Apologies on the audio. See if we can get that going. So you guys know this is the Trader Lab. It's a group of like-minded traders who come together to leverage their collective experience. It's about the business of trading, which is a gaming process. It is not predictive. The idea of Trader Labs to help you understand market mechanics, how the market works, why it does what it does, and how you can overlay it on structure using a volume profile. Volume profile is a chassis. It is not a system. And the idea of Trader Lab is to help you understand market mechanics. And also, I've shared 60 PDFs of structured trades that you can reverse engineer, and you have to vet them and make them your own. Trader Lab's an advanced trading process. It is not plug and play. There is no red light, green light. It is based on a chassis of gaming theory. Gaming theory is the same way casinos operate, but they do really well. The reason they do well is because they only play games that have an edge that favors the house. They also operate in an environment that's 100% random 100% of the time. The only thing they control is how they play their games, not the outcome of the games. But because they have the edge and they just are not attached to the outcome of any individual hand, they get the opportunity to extract the dollars from the gamblers. That's why gamblers win, but ultimately the house extracts the dollars. So we pay the gamblers, unless, of course, we are gamblers, and then we're going to have random winners and losers just like we do. But I don't think being the gambler is a way to create sustainability and potentially a career path. So the idea of the Trader Lab is to help traders differentiate between fantasy and maybe the business that they want to be in. And the fantasy is we can create certainty and confirmation to avoid risk. Well, if the casinos can't do it, how can we do it? Something for this astute group to think about. Let's get going. And thanks again for visiting the Trader Lab. Now, I'm going to take you into what has happened over the last few days. Very important. And it's important you follow this stream and you watch these every day. And by the way, this is what these 60 PDFs of structured trades look like. You can download them if you haven't taken advantage of this. They're all available in the Trader Lab. Use the link in the bottom of YouTube. And you need to access the library of webinars. So there's no cost for any of this. So let's get started over here. I showed this to you guys yesterday. Now, this is Friday's RTH. Now, this is the pause day. Very nice. Now, let's go back over this. This is a consolidation. It was too high. We gapped outside of it. This orange line is from a consolidation out here, and this was the retail or highest volume. This is volume profile. When I gapped below it and tested it, it was too high. And there's your selling. Then we gap again. And at this point, our retail price, this orange line, is here. And that looks like we're going to go south of the border. And I was, on this day, on the short side, in the morning. All fine, looking for it to continue south of the border. The news came out, which disrupts everything, because the market has to reprice. And that was a huge short squeeze. Where do we come back? Here, right to the breakout of this consolidation and this price that was rejected. So the possibility is, and this is the joy, on this day that we would come back here to the retail price and test it. And if we held it, then come back up and potentially test this high. Okay? Well, we didn't get to it, and you'll see the buying. This was Thursday last week. Okay? So we have a tail, and we had selling most of this day, but we still closed here. Then on Friday, we tested down and then we closed up towards the high. And 90, it's like 92, 93-ish is now the high volume in these 3 days. Retail. So retail down here, too low, maybe, who knows. Here, too low. And if I can get above it, which was yesterday, then maybe, so too high, too high. If I get above it and it's too low, then I can go north of the border. Let's look a little further now. So again, where's this price? It is, I think it's 92. Okay? Everybody with me so far? Watch. Now let's look at yesterday. This is very important to understand market mechanics. Here's our 92. This is yesterday's behavior. Where do we test? Remember, resistance, resistance, open higher in the gap, test, support, north of the border, potential. Again, only potential. Take out today's high, about an 85% probability. You got to vet this for yourself. Or yesterday's low, but what did we do? We held support. So now it is primarily outside in trading, mean reversion, longs, and we had some news today which threw a little bit of a wrench into things, but that's okay. And now if we come out here, where do we go? Let's come back. If we come out here, there, and potentially fill the gap, and potentially here, or none of the above. That's the auction. Now what happens after that? We all put our helmets on, and that's trading, right? But this is called auction market theory. And what it is how the market works. This is real time. Let's go back to the RTH Open. And if you guys have questions, please post them. I'll do my best. There were a lot of trades today. Some of these are structured trades that I share in the Trader Lab. Others are advanced concepts. The idea of Trader Lab is to help traders understand this business, and it's not a video game. It is an educational portal for advanced trading processes, and you have to vet them. And here's what vetting really means. What one trader does not fit the psychology or tolerance of risk and the rest of it for another trader. Well, what do? Do you only trade with a directional move potentially, or do you trade counter trend? What do you do? Well, if you don't have the answers, you have to find them, and then you need to get aligned with it. Are you guys with me? How we doing? Are we doing okay? Please give a like if you're visiting in YouTube. Support the channel. I hope the audio's okay now. Is it okay everywhere? Thanks for your patience, just in case. Okay, thanks, Dan. Appreciate it. By the way, thank you, Dan, for being here. Dan is part of the Bookmap support. Keeps us from tripping over the cord. Thanks, Dan. And does a lot more. There's a whole team behind the scenes here. And thank you guys for all you do. All right. So let's take a look at those levels we were talking about. If you remember, yes, now here's a little bit more of this. Remember the target I showed you at 92? That's yesterday's low. Isn't that interesting? Now let's walk up the food chain together. Now this is auction market theory, and let's use another term, shopping. Okay, easy. If in an now this is multiple time frame as you think of it, and the way conceptually to think of this is Russian dolls. They're inside each other. So in an intermediate time frame, this was the highest volume. If I come down to it yesterday and it's too low, and I reject it, this is a long, potentially yesterday, just so you know. Or in the ETH now, starting for today's RTH, the last auction is ETH, this is still too low. I tested it. This to me is a test. Now, there's no precision. This is trading. You guys remember that, right? So the market's going to come down and look for too low. Well, if we found a retail price in an intermediate time frame that was too low yesterday, and then in the last auction, the ETH, we can't get below here, then the possibility is now we're back on the gravy train on the long side, perhaps. And I say perhaps because nobody knows. Market doesn't have to do anything, right? Now, I have statistics, but because I didn't have audio, I'm going to skip them, but they're all available in the Trader Lab. So let's go take a look. Now, you have to vet everything for yourself. Liquidity is here. Now, there's a couple possibilities here. This is yesterday's. Look how this is bracketed. This is almost like a beautiful thing. Now, I know you guys probably go, what are you talking about? It's beautiful, but it is beautiful. Too low, intermediate time frame. Yesterday's retail price. Retail in an intermediate time frame, too low yesterday. And then yesterday's retail price. So too low, and this is the retail price from yesterday. And then I also have somewhere in here the overnight volume point of control, which is the volume from the ETH. So too low below, retail in the ETH. So the possibility to check it. Then this is the next target up. That's a target. And then wherever it goes, it goes. So let's see how this plays. So RTH open. Remember, liquidity was over here. Break high. Buyers are aggressive. Notice where the buyers are. Buyers. RTH open, you get a little selling. Thanks for playing. Buyers are aggressive. I get my sellers. Now, what do I know? I know this liquidity got taken out and absorbed by the buyers. That's what I know. So I know I might have an outside edge here. Where's my target? Here. So the first long, now this is an advanced process in Trader Lab. And here's the other piece. Now, a lot of this you're not going to be able to do. Why? Because you don't know yet what it says. It's a language. So let's go ahead and take a look again. Let's look at a triggering structure. So what do I know? Well, I know here, let me get back to this. At the RTH open, so I had this. Once I get above it, it creates support. This also is resistance. So I get resistance. I get my buyer. I rotate down and it sets up. I'm looking for longs. And that's because of what happened in the ETH and what happened to yesterday's low. So that gives me the concept of buyers because the sellers certainly took their shot yesterday. Now, if you remember yesterday's stream, I said buying. I said my plan for the day was longs. And it didn't, that plan turned out I had to turn around because we got, and I was looking for selling early and then I was going to take longs. Well, we got our selling and then our buyers just didn't have any muscle. You know, we got the counter rotations, but the sellers were in control yesterday. And ultimately I had to turn around and get short. And I narrated that in the stream, you know. And then you always say to yourself, gee, I saw it wasn't doing it, you know, but I have levels down below. So it's no different than, and it's just the way I trade. I trade large rotations. It's not the way you should trade. You should trade whatever fits your psychology. Because no matter what you do, you have to be able to groove with it, if you will, without losing your mind and having conflict. Because we have ambiguity and randomness, so we got to reduce the psychological stress. So this out here comes back to here. The buyers got above the liquidity. You see how the buyers went in here, pulled back, resistance, break high. What happens to resistance? It becomes support. Sellers are here. My targets are above. Absorption here. Now let me explain this. This is order flow. when I come down here, and I don't know, right? So of course I don't know. If I knew, then I just take the trades that work. I think the casinos would only play the hands that they win if they had any way to figure that part out, but they don't. So right here, I see my buyer. So what do I have here? I have my sellers here. There they are. They took control. Buyers exhausted up here. 66 contracts. And I come down to the other side and I want to be long. Now, the problem as a trader, of course, is from where? And that's why we take stops. Wouldn't you like to know? Me too. So let's get into microstructure. Follow the yellow brick road. Now, none of these are recommendations. You must vet everything for yourself. And I don't operate on one dimension. I have to kind of think in multiple time frames, if you will, or I call them fractals. In this time frame, or the daily developing time frame, I call it a fractal because it's not regulated by the clock. It's regulated by the buyer and seller interaction. So that's just the way I had to come to this, because early on I was time-based like you, and I thought everything was a function of time. 5 minute, 1 minute, whatever. Tick charts, range charts, doesn't matter. It's all the same, except in order flow. Then it's not the same. It's what happens. How long does it take before? Why didn't this go down, by the way? 10 sell stops, 1 sell stop. Buying iceberg. What does this tell me? Buying iceberg, buying iceberg. This is called stop divergence. This is the stop an iceberg detector. I find it very useful, but nothing exists in a vacuum. Tools in trading, at least for me, are a confluence of elements. Order flow is the tip of the spear. In fact, I did a primer webinar. It's in the library in the Trader Lab chat, and it's a primer webinar, and it talks about multiple concepts that are integrated. So that would be like, what's the overall direction of the market? What happened yesterday? What happened in the ETH? Who's on the wrong side of the market, etc. And where's the fuel? The market goes up to go down, and the market goes down to go up. I know. You're going, boy, he's brilliant. No, he's not. What he is he understands that stops pile up on both sides of rotations in all time frames. So when the market goes down, the potential exists to squeeze. When we have an up day, the potential exists to rotate down and get the sell stops that are trailing the market. And this happens in all rotations and time frames. So when you understand market mechanics, you'll also understand that there's sellers here and there's sellers and stops are above here. And if this is the opening swing high, which it is, then what's going to be above the opening swing highs? Buy stops, right? Okay, now you know all about it. Now let's get back to randomness. 10 sell stops, 1 sell stop, stop divergence, buying iceberg, break high. Micro high volume is there. This is an auction in a fractal. I'm not paying that. Yeah, but it's on sale. I'm not paying that. Sellers are here. Yeah, but it's on sale. Buyers are there. Break high. Volume is there. This is where the retail price is, or the highest volume in this auction or fractal. If I break away from it, here's the language. This is a foreign language, and it's foreign to all of us because we use indicators or Google Translate. I threw all my indicators away. I use none. What I do, and I found, is I had to learn to speak a foreign language. So I'm not using an indicator or a translator because they don't know what's going on most of the time. And yet, under certain conditions, they all have winning. They all win, which is what keeps us trying to fix it and curve fit it and make it better. But what I found is this is a store, and the buyers and sellers are interacting. Too high, sellers are here, buyers are here, and I have no clue. It can break this way or this way. If it breaks this way, it is suggesting in this current auction, think of it like a store, this price might be too low. Now, what does the market tend to do? It potentially, and I'm always going to say potentially because I have no clue, can come back and check the price. And when they come back to this store, and if the price is still too low, I can then leave it and come back here. because this is see this concept here, this little auction in this developing daily time frame, the whole thing. This is the retail price up here for the whole volume. So this whole day so far, the highest volume is there. In this little, call it a little day or a little auction, the high volume is there. If that's too low, I go there. Watch. And it's not a recommendation. You got to vet all this for yourself. See where it comes? And where am I trying to go? This is a structured trade. Where am I trying to go? You know this. Where is it actually? Here. ETH high or low has over 90% probability. You have to vet this for yourself. Naked volume point of control, yesterday's retail price. Look at the concept. Micro retail price, developing daily retail price, yesterday's retail price. Too low, retail developing, retail yesterday. What was too low yesterday? Intermediate retail price, too low. I'm just showing you a concept, guys. If you get this, you're going to be way ahead of other retail traders, in my opinion. Too low, microstructure, developing retail. This is called mean reversion. We reverted to this mean, too low, revert back to this mean, scale. And then where's the next mean to revert? Here. You see it? So 65. So subject to your plan, you're going for this. You're going up here. This is your goal. Now, what do? Here, you'd be risk neutral and you manage your trade. Now, this is something you got to sort out. For me, I'm only looking for longs. So now, on this trade, get taken out on a trailing stop. But let's come back and look. Where are the stops? They're under here. What happens here? All I do is come back, take out 129 stops. That's these guys under here, including moi. In fact, my stop was, that doesn't matter. I manage my trade differently. But there's my sellers. What happened to these sellers? They were absorbed. What happens over here? They are absorbed. What happens over here? My buyers come back. What happens over here? I come back to the retail price. This one ran away. I went, I posted that and traded it. But what's this? It's a long. You see it? And now where am I trying to go? I got a scale here, TraderLab structured trade, and back on the train. Target. It's trading. Wouldn't it be nice if it just went one way? I know. VPOC migration. We're going to label this. Now, this is all process. You can learn this in TraderLab. And by the way, just like me and every other trader that's ever walked in anybody's shoes, we all take stops. We all get frustrated. Whatever can go wrong goes wrong because it's random. How do you measure right and wrong in trading? Following your plan. Because if you have an edge, just like the casinos, you'll extract the dollars. This is along here also. Let me show it to you. Now, this gets a little more advanced. And I posted a lot of this in TraderLab today. It just depends for me if I can do it. I can't always post when I'm trading. I'm not a good multitasker. So, and you really got to kind of focus with this, So let's look at the concept. This yellow line is the retail price for the whole day. This little white line is the retail price from this. So I'm trading multiple fractals or time frames. This is what was too high. I get my sellers here. I get my buyers here. Retail. Now, if this moves up, it says that's too low. That's too low. New retail price. Watch. It moves up here. New retail price. Now, let's look at a behavioral change. If this is too high and I break below it, where is my support? It is now here. And I have structured trade, and I narrated this in TraderLab. Now, this is a little different because this is advanced processes again. We have a structured trade in the TraderLab called VWAP to VPOC, and it's in those 60 PDFs. And this is the trade. Now, the thing with this is there's our sell sweep. This suggests a possibility of a counter rotation. Okay, so the sweep alignment. Now that I took this trade, and subject to your understanding, and this is something that is nuanced and comes with something called an understanding of context. If I come here, let's go back to the shopping experience. This is the retail price. This is too high. What might we do? Well, if we get VWAP to VPOC, might we come back in an up context and test what was too high? Right there. Target. Now, let me take you to another little concept that we already discussed. You're going to like this, maybe. Hope you do. What am I doing? Besides, I ask myself that question always. But besides that, if this price was too low, and then we leave this, it's maybe too low, and then we know, and this was the retail price from yesterday, it's a target. If I pull back to it from above, and this is an outside edge, just something to think about. Watch. This is actually mean reversion, outside edge. Watch. Too high. And if down below is too low, what might this be? Is it possible this might be too low and the shoppers are going to come back to the store? And is it still too high? If you take the long, you're going here because the trend is up. And for me, the next target, I believe, was right ahead of 85. And I posted this in TraderLab. Who knows? VPOC migration, maybe too low. If you have questions, post them. I can't see your questions at the moment, but I will come up for oxygen. Now, what you're seeing me do is structured trading. You can learn this, but you have to vet it. The outside edge. Now, remember, sweep into VWAP. This was too high. Bertha, let's get in a car. I like shopping up here, but I want to make sure this price isn't still too high. Test. See? Then what? Is this too low? Or is this too high? If I clear it, then what's next? This. And yesterday's value area high. Another little item, not going to give you statistics, but for me, using Orderflow, I have alignment there and there. So my next target was ahead of this. And you'll see, watch. Support, right? And where's my target? Here, out. Lucky, not skilled, lucky. And following a plan. By the way, when you have what I don't know, there was a saying coined many years ago. I don't know what it is, but it's kind of like preparation and opportunity. That's how you create your luck, I think. Something like that. So I'm prepared and I understand order flow. I have a statistic here, and I'm also going for this. If we can clear, there's fuel up here. Now, I don't know if we're going to do it. We have an 85% probability, past performance not indicative of future results, to take out the previous high or low, and I couldn't tell you which one it's going to be, except I know what happened yesterday. So, you know, theoretically, that's what I'm trying to do. Who knows? So, and I don't know if this is where the news came out, guys, where we had the Europe says, we'll see you later. Does anybody recall what time that was? And I'm going to look up now. Yeah, hi, Suman. Welcome. Welcome to Trader Lab. Hi, Van. Hi there. And Dundee. Two answers for you. Um, in YouTube. This is I use Investor RT. It is my higher time frame charting software. And remember, this was yesterday. See the support? And this exports to the cloud node. So I'm answering two questions in one. This is updated in real time, and that's all generated from here. So not here actually, but my Investor RT, and it's very cool. Because then I used to do this all manually. So what I do is I review my higher time frame. I put my levels in manually. Okay. I run multiple book maps here, separate, and I actually can export these manually, just a little click, click, and import them to my streaming book map. And so on my trading book map, but all these are updated on all book maps for me. And like I say, I've got more than one running here. And then this I do manually also, because as the auction is changing, I need to keep track. Now in the auction, so you know what is going on here, this is how the auction works. It's something called a distribution. And distributions are rotations. So the market just normally, but it can be, doesn't trend. It typically moves and then it shifts into rotations. By the way, guys, was this where the news was at 9:20? 10:15, Liz, was that yeah, so this is Central Time Zone, so is this what is am I right, Liz? 9:12 Central? Yeah, okay, thanks, Liz. Okay, so this was the news. So I got out here, look, and I had runner. So that one went to the happy hunting ground. Now, which is fine. Now this, we come down, and right here, I think the term I want to use is confused. Now I have a low volume node here. When I fall out of this, now this is like open field running. First of all, you get something like this, and it's like everybody's jaw falls on the floor, including me. It's like, what's that? And we know in the current climate that we are very subject to volatility and news disruption. News disrupts the auction and everything. Doesn't matter. You can call it the auction, but everybody jumps out the window. And that's what creates this. 317 sell stops. But look at the icebergs here. They are taking the other side, and I have a sell sweep. What does that tell me? Good question. It tells me counter rotation potential. Now, out here, outside edge, low volume node. Let me mark this up for you. What is this? Good question. Now, this is the auction. Now, don't forget, this thing is disrupted by the news. So if you have experience in this, there's a couple things. News could be a temporary disruptor, and then the market's going to come back to where it was disrupted, which would be here. That's one possibility. The other possibility is that we might come back up to an area which is mid and VWAP, and if we can't get through this outside edge, then we can rotate and do mean reversion this way back to the high volume node. I'm not paying that, maybe. And we're under this, and then we can come to here, retail. Let's see. Actually, that's what this is here, but let me show it to you. So we get the news, everybody jumps out the window together, no parachutes needed, sweep, absorption, icebergs, you see them? So now I'm getting this, and let me look at other levels here. And I'm looking to see, are we going to get our buyers again who are taking advantage? But to go higher, I have to get over this. So that's kind of the lay of the land. So when this happened, I'm thinking, okay, I got to get short because this broke structure. Okay? Mid, VWAP, everybody's out the, So let's see. Outside edges here. Sellers are in control here. We get to the mid. Watch. Outside edge. Remember, outside edge. Outside edge. outside edge, short, VWAP. Why? Alignment, location, location. Why? If this is rejected, this is an auction, and this was the retail price, and all of a sudden we leave the supermarket and we now return down here and start a new auction. Then I have to, this is called mean reversion. Instead of being a buyer going this way, I'm now a seller coming back here. And where is that line that we were always talking about? It's right there. So if I sell this, I'm coming back to this. And then maybe out the bottom, and who knows? Let's see. See? So this for me was a short. I get risk neutral, and then I get my buyers come back. And then it's, oh, okay, that's done. Now we got to turn the barge around. VPOC migration, new retail price. Now this was confusing for me because I said, well, this was my dividing line, you see? And then I blew up into this thing. And I'm going, well, it was like, what's happening here? So I have my support here. I have my outside edge here with liquidity, and I got variable high volume node here. Retail, too high, current retail. Now I can do this. Let's see what it does. And I want to be long, don't forget. Sell sweep here. Support, remember this, here. VPOC migration suggests, here's the thing with this. And this is tricky, of course, because I don't have good structure now. I do have that, and I have a variable high volume node, which was from there, which was too low. And again, no clue. My sell sweep, my full session VWAP at the time, I believe, I can't say for sure, but the sweep, and then this is called mean reversion. If you get along in here, you're leaning against this absorption, and you're looking to come here. If we can get above here, then I can theoretically come back here and come out the top. That's the idea. Who knows? Let's see. This is the target. Notice where we come. I posted in the Trader Lab. Everybody should have Dramamine. And this is where we're trying to go. So support's over here. Resistance is up here. There's another spot too. This here, this high volume node, if you're getting long out here, you're coming, this is called mean reversion. You're doing is you're coming here and you're trying to come to there to scale. Out here, notice the location, sweep to scale. And then you're going for this, not a recommendation, and out the top or not. That's it. Questions? And let me make a couple adjustments to Investor RT so I can now put more levels on here for you guys. Thanks, Liz, on that. How we doing, guys? Everybody conscious? Please give a like if you like this. If you're getting something out of it, this is Trader Lab. This is an advanced methodology. And there's no holy grail. It's just different. What's different about this is, and I'm not saying you can't use indicators, but most of us prioritize inputs that may not have any kind of edge. They just have random winnings. So we are always going to try to make them better. And that might not be you, but it was me. Even with trading systems that I built, it was the same issue. So too low, retail, mean reversion, too high. Where am I trying to go? Here. I hope that makes sense. So, and then out the top, here to squeeze. Now, we don't have to do that. And to get 85% probability take out yesterday's high or low. Past performance not indicative of future results. What's above yesterday's high? Stops. So that's the lay of the land. So unless things completely fall apart, By the way, notice this came in before we got this. This also supports the long. Okay. So the market can do whatever. So this is the next target, not a recommendation. And if I can get over this, then. So that's the trade. So for me, not a recommendation. I always have to say that because I don't call trades where I take my stop. And I take them all day. Not a big deal. Other than my emotional response, which is the same as yours. Keep the children out of the trading office. Because that's just emotion. But the business is not emotional. And professional traders do not attach themselves to the outcome. They become detached. You'll notice the dealer in the casino deals the cards, and if they give the chips to the gambler or the gambler gives the chips to the dealer, it's the same. They're detached. They're just doing their business, and they pay the gamblers, and the gamblers pays the house. But because the house has the edge over time, they're getting more dollars from the gamblers than they're paying the gamblers. They're detached. We need to develop detachment. And I understand our emotional wiring is, seeking approval. We're chasing the dopamine fix. We want to feel smart. This is not a gold star on the forehead business. This is strictly a process-driven, statistically based business. That's what the Trader Lab is built on, helping you understand the business of trading and then create a trade plan so you can operate in this environment, which is random. If you can accept randomness, you're not going to look for confirmation and certainty because it doesn't exist here. What exists here is probabilities. That's a different solution than trying to fix a process looking for certainty that's curve fitted because the market's unique at every moment. So how do we deal in that environment? Well, same as the casinos. They don't control the cards. They're random. And they don't control how gamblers play the cards. That's random. So what do we control? Same as the casinos, how we play our game, or in our case, our structured trades, and only interacting when we have a vetted statistical edge. Is that logical? Not complicated, but is it logical? And is that different than your beliefs? You don't have to answer that question, but I want you to ask yourself the question. Do you believe something else? Ask yourself. Don't answer me. Do you disagree with that? Now, here's the catch. And I did a webinar on the catch. It's called Trader Groundhog Day. That's where you curve fit, tweak, tune, and it doesn't matter how you do it, whether you're eyeballing the last big move, and now you throw your MACD in your envelope and whatever else, your VWAPs over something, and then next time it shows up, you're solving to replicate that 20-point move or whatever it was, because look at those dollars, and that's what you're focused on. But in between, the market is actually fractal. So we can be overall potentially moving up, but along the way, we're going to rotate. So what are you actually trading? Are you trading rotations, or are you just trading a bullet train? Well, if you solve for those outlier moves, most of the time we're in this mean reversion rotational trade. And it changes from directional movement to rotational movement. If you're solving for directional movement, you're not going to be around potentially because you're using the same solution for this thing. How do you trade this? Well, you need to know that. And you need to know what the overall context of the market is, which at the moment is up. Now, subject to your quote time frame or fractal, what are you doing with this? Are you only buying it like here? Or are you selling it for the counter rotations? Are you only using the counter rotations, the triggers right there, to exit, and you're only using this to get long for continuations? Do you see the questions? If you don't know the answers, or you don't have an answer, then you might want to visit Trader Lab, because I think you can find the tools to create the answer that's right for you. It's not what I do. Believe me, you don't want to do what I do. You want to do what's right for you. We have different, traders in the Trader Lab, so you know, that'll be selling this and be buying this. I don't do that. I used to do it, but I find that for me, if I understand let's just say the potential, that's all you got in this, to take out this high at an 85% probability that either the high or low goes out, and we held that key area that I pointed out to you. Let's go back. This, yesterday's low, ding, 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 key. What do I want to do? Get long, and notwithstanding news or anything that disrupts the auction and throws me with you under the bus, longs, no shorts. Shorts, either if you're trading two sides, that's a viable short there to there, long to there, and then up to there. If maybe, why? Stops are sitting here. Why would I go long? Because my primary contextual analysis says lean on the long side, do whatever you need to do, wear a helmet at all times, manage your trades, get risk neutral, scratch the trade if it fails, add if you have reasons based on your plan. And here's the answer to all of this, guys. You got to have a trade plan before you step in the market. This is volatile and random. Remember, random. What do we do in a random environment? If we don't have a specific structured plan, we are responding to emotional stimulus. In other words, fight and flight, the primal wiring. Stay away from the saber-toothed tiger. Every time you get a counter rotation, you're going to respond with fear. Oh my God, I'm going to get bitten. Well, maybe it's only this and then new high. Maybe it's only this and then new high. Maybe I don't fade this because the trend is up. Can you differentiate? How do you answer the question? The answers are already existing before you open your platform, because you've done the work outside, you've researched it, and now you have a vetted trade plan that gives you an edge. That's Trader Lab. It's not that my indicator says sell this so I get short, or my indicator says buy this and then I take a stop. My indicator says buy this and I take a stop, and my indicator says buy this and I've already hit my loss limit. You see what I mean? My indicator says sell this, I get short. Really? Would you? I won't. Did I in the past? Yeah. Because I was letting the indicators do the thinking where they have no capacity for that. They just follow price or derivative of price around. If you understand market mechanics and you can learn it, and I'm actually very passionate about this, I just spent too many years trying to fix a defective process that wasn't actually in alignment with the actual business I was trying to succeed in. I was always looking for confirmation. Well, we're all risk adverse. Why wouldn't you look for that? But suppose that's the part of the problem, not the solution, but we're trying to fix something that is not in alignment. That's why this is gaming, because we can't fix uncertainty and we can't fix randomness. We need to fix our process. That's all I can say to you. That's my message. That's why Trader Lab exists. That's why I agreed to do Trader Lab. And there's no cost for it. So I think that's something that's kind of interesting. What do you guys think? How are we doing in YouTube? Please give a like. Hope you're getting something out of this. These streams are available for you guys. I want to show you Trader Lab, if I can do this without unplugging. I'm running like 4 computers here. It's just, oh my goodness. And all kinds of other technology and stuff, to make you crazy. Let me show you the Trader Lab briefly. If I can do this. I'm going to try this. So this is what the Trader Lab looks like, okay? It's a community of like-minded traders. Thank you. It's a gem of a live stream discussing psychology. Yeah, well, this is what Trader Lab is all about. It's traders helping traders. I'm just one of them, but I've been doing it going on 46 years. So I've got a little more stops under the belt and more frustration and more dead ends than most of you have had time. And I started out, we didn't really, technical indicators were new. I know, 1980. We didn't have computers. Didn't have an internet. So everything was obviously very different. So, but there's a lot going on here, a lot of interaction, questions, um, just tons of great stuff. It takes a village, I think is the saying, to do the work. I mean, we have data mining going on, research, just a tremendous community, but it's only, it's professional. And our senior trader has over 50 years trading. And you guys know about me going on 46 years. Start here with the primer webinar, and thanks, Ned, for curating this. This is a high-level overview, and be sure to watch this one, Meet the Trader Lab. This is an advanced trader education portal. Now, this one, this is just, you can see the entire process laid out, the plan, seeing the structured trades, the execution. Then there's another one here. Why most traders using indicators fail. I think you're getting the idea, but if you want to get more of the idea. And then trapped in trader Groundhog Day. That's trying to fix a defective process, and you still have winners, but overall you're not moving towards the goal. You're moving in the wrong direction. That's what happens to all of us. Gamblers win. Nothing wrong with that, except what happens. They might get lucky, but they cannot sustain profitability. And that's a high percentage of them. If somebody does, as you know, they're an exception. But for mere mortals, they lose. It's the same for us. So let's not be gamblers. Let's sit on the other side of the table. That's a choice you can make. But you got to roll your sleeves up and get to work. And it's going to require you to change your beliefs. And that's going to be hard to do. It was very hard for me. You spend years with indicators and derivatives of indicators, and then I built trading systems. I was indicators on steroids. I had to use a system to optimize it because I was swing trading and position trade. There was no day trading when I was managing money in day trade. And you had to pick up a phone and call your guy on the side of the pit. This is not what you call electronic, So we didn't have volume. We didn't have any of this. So we didn't have any of these tools. We didn't even have domes. So, just wasn't there. So you work the best you can, but it didn't exist. So I was there as the technology evolved. My first computer that I did analysis on was an Apple IIe. And that's not, that's just to give you a little sense of perspective. And it was hard also. So, but even to get data to do back testing, you had to buy it on those big floppy disks, and you had to buy data. And it wasn't tick data. I mean, getting a 15-minute bar was like, and they were bars, there were no candles back when I was doing this. Candles didn't really come in until late 80s, I think it was. So, So anyway, neither here nor there. I'm just saying it was very hard for me to abandon years of work. And I did everything. Whatever you probably have tried, I've probably done it, and I don't even remember it. It's kind of like somebody brought up pitchforks the other day, and I use pitchforks. I forgot all about them. I even looked into astrology. Now, because there were systems out there, and it would be like, is the moon rising over Uranus? Anyway. And somebody made a system and sold it. It was actually advertised it was called Commodities Magazine. Now it's called Futures. Back in the Stone Age, it was Commodities Magazine. Because when I came in the business, it was primarily commodities, There was no S&P. There was none of that. And when the S&Ps first came in, these are the big ones. I really like the idea of those. We called them pinstripe pork bellies. How do you like that? And by the way, if you want to have some fun, you think the NQ's wild, try trading a pork belly. How we doing, guys? Are you guys still with me? Down trigger, Peppy? I don't know about a down trigger. It might be a rotation, but what is the context? Your trigger is here. Your volume or resistance is sitting right at this node, right there. That's resistance. Look at the behavior. This is just something to look at. Remember, this is where we're trying to go, because this has more material value to it as a high volume area. However, and here's always the joy, you've got that high volume also. That's resistance. See the green line? We got resistance. So we can come up there. The resistance is here and here. And there's where your sellers took over. Sellers are still there. Sellers are still there. And there's your sellers. Okay? Buy sweep here suggests counter rotation. So Pepe, yes, these are all potential shorts. Rotations. Now, this is the joy of trading. Is it a short or is it a rotation? And you just hang out and your stop needs to, after scaling, your stop needs to be below where these absorption took place and the sweep took place. All this. So this is the outside edge. This is your support. Where's the stops? They're under here. Am I going to trail my stop here? I do not. Doesn't mean you can't. I do not. Why would I not put my stop there or there? Because retail traders put their stops there and there. What's better for me? If I come under here and pick these guys off, I call it a stop pick, and the icebergs come back in over here, and then I rotate back up, it sets up mean reversion. That's one of the possibilities. Or we don't get here, and now we get the stops from these guys. So you got stops there, there, and there, and there. So that's our sandbox. So Pepe, is that a short? It might be, by the way. I have no opinion. On a short, I know what I'm going to give you what my thinking is, not my prediction. There's a big difference because I don't know what's going to happen. Now, if you know, you should DM me, we'll talk. But what I know is what I gave you in the higher time frame. And that doesn't mean we won't come down here, take all these longs out. This guy is sitting here, trade into this, and then come right back to the mean. In my trade plan, and again, it's not a recommendation, it's longs only. And then if I get taken out, I get taken out on my runner or runners, whatever it is, and that's just it is what it is. Detachment, okay, where's my next location? Where's my resistance? Where's my support? Where do I want to engage? If I come outside, I'm going to be looking out here because I'll take these stops out. If I just come under here and I see absorption, I'm coming back there. If I get through here, I'm coming out there. And I got my target up here. If neither of those things happen, I'm hanging out. If I get taken out and it breaks down and goes all the way down, then I'm out of my longs and I follow my plan. Is that my job? Yes. Can I predict the outcome? No. Am I a counter trend trader? Sometimes. Am I a counter trend trader at the moment? No. Not a recommendation. Are you a counter trend trader? Trade it. But you have to have an edge. Some traders will acknowledge maybe the context is up, but they're trading into the stops. I built a trading system that was based on trading in the stops. I called it paper chase because on the floor, it's like, where's the paper? If you guys know anything about the floor. So it would be, where's paper? Well, paper's, where is the paper? Right now it's sitting here and there. So where's the paper? And the paper's sitting up there. So I got buy stops there and I got sell down here. Sell stops, that's where the paper is. So, boom, boom. Okay, let's see what it does. Are you guys with me? Ben, do I use the absorption? I don't use it, but I can see the absorption here and the iceberg. So I don't use it. I have in the past. I used it for a long time, but it's kind of redundant for me because seeing the icebergs is the absorption. And if I see a sweep, that also shows me potential absorption, like excess. So notice where we're coming. So this is anticipated, not predicted. Why? Think like a retail trader. Don't act like one. What do they do? How do you learn to trade? Take your education. and the dues or tuition you've paid, the stops you've taken. And it isn't just that you take a stop. Why would the market come here? This is auction market theory and market mechanics. Why does the market come over here? Because there's sell stops. If I come down into the stops, there's my icebergs who are buying. If I pop into this, then I want to see if I get absorption, and then I'd come back here. I already know where my next trade would be, not a recommendation. And I need to get below this, and preferably this, because then I clean out this outside edge, and then I'd be looking for it. If I can come outside, I'm coming right back there. And then these guys who are shorting this leg become the buyers. Think about how the market works in all time frames of fractals. Market goes up, it'll go down. So in other words, the sell stops are here. So the buyers in this leg have their stops here. There was absorption here. So if I come down here, I'm looking for the stops to come out, and I'm looking now to see if the iceberg, and there's the stops, you see them? So this is all market mechanics, because you got to think like a retail trader. What do? They put their stops over there, but not act like one. So if I anticipate their behavior, which is what I do, and it doesn't mean I know anything, it just means maybe, now I'm going to be looking in here for a micro high volume and a potential. And now the range is kind of tight, but doable. Somewhere in here, potential to come back here. Now, I don't call trades, so I'm not going to say much about it except to let you know that this is what I'm looking for. Because I take stops, and I don't want you to take a mine. I don't want to take yours. Fair. So let's see. So I'm looking now for it to come back here. Let's see if it does it. Not a recommendation. So I got absorption here. My buyers are above here. Let's see if we get here. Not a recommendation. Let's just see if it happens. Never know. And we could fall under there. Anything can happen. Don't forget, this is trading. And this is called mean reversion. Outside in. And what's the context? Well, at the moment it's up. Will it get there? And as Dirty Harry used to say, do you feel lucky? Well, do you? So now we got to see. And we can test this still. Icebergs, we can test. Now we got to see. Needs to clear this, or else it's going to keep going. Watch. This is why these aren't trade recommendations. What's very hard with mean reversion is where's the outside edge. That's why we call it mean. Where is the mean? And I'm getting my sellers still. Let's see what's going on here. Yeah, it was some pretty good selling. Now we got to see. Nope, still got good selling here. Let's watch. And I think there's a news conference. POTUS is going to do something at noon. Buyers are above the sellers. Okay, now we got to see if these buyers can have some gas in the tank. If we can reverse from here, we can revert. Here's how you might think about this. The buyers got above the sellers here. This is micro support, this little node sticking out. That is not the right place. There. That's your little micro auction with the high volume node. There's your buyer above the volume. Now, if we did it here, if you entered here, you might get a scale, you might take a stop. I can't say, because some of us are going to enter here and you might or might not get scale. Let's assume you took a stop. Okay. Life. It's a real world. And now what's this? This is a long, and you're trying to get risk neutral. Then if we can hold this, the target then becomes this. And then we're still looking to come out the top or not. This is mean reversion. Mean reversion is my least, if there's such a thing as a favorite, what's hard about mean reversion is where's the outside edge. So, and the structure, if you look at this structure here, the outside edge is down in here. So I'm trading very micro. It takes more skill. And for developing traders, it's better, in my opinion, to wait for the larger ranges and the more structured outside edges. So this is where we're trying to go. Same as this thing, wherever that was. I think it was here, right? Going there. Well, now it came from there. It's the way it is. Are you guys tracking? Anyway, Ben, I hope I answered your question. Alan, IB low does not fit in my plan for today. IB high fits in my plan for today. IB low to me was an extreme built off of news, and the trend based on the RTH from yesterday's test of the higher time frame, statistical probabilities suggest longs primarily for me, other than dancing, here and there. But for the stream, I don't focus on what do they call it? Dirty dancing. I focus on structured trades that I believe anyone can learn in the Trader Lab. And we all take stops. So we got to get over it. There's no holy grail, no secret sauce. But Alan, to answer your question, longs only. For me, not a recommendation. This thing can take out the low of the day. It could go to zero. But in the meantime, my trade plan suggests to there, and out the top. Actually, to there, to here. I think this one is stale. Let me just look at this. Now, see, this is resistance. Let me bring you back to fractal world. This was too low. This is too high. Now the volume point of control, I can see this right, is here. Resistance is there. This is a sweep. My sellers are here. There's my resistance. If I can get above the stops, remember how the market works. The market goes up, sweep, to go down. The market goes down to go up. Where were the stops? We discussed this. Right under here, Alan. If I get these guys out, then what? My icebergs come in. There they are. These guys get the ticket to the buffet. Thanks for playing. Absorption. Then I don't need the absorption detector because I have the stop an iceberg, okay? And I can read it. A lot of iceberg buying here. Buy stops are here. Next target is there. I got to clear this sequentially. High volume, outside edge, rotational trade. Remember, support is here, support is there. Mean, outside in, mean reversion, separate trade plan. Context, north, maybe, probably, who knows, until it changes, which only means longs. Outside in, how do you trade an uptrend in a rotational market? Outside in, mean reversion to the long side if you think you want to be long. Me, long. Does it mean I won't get run over and this thing goes down and takes out the low of the day? No clue. Not my job. My job is to get in alignment and then take my risk, play my probabilities, and accept the outcome. How do I grade myself? Not by the winning trades, by following my plan. My plan, the work has already been done. It has an edge. Is it going to show up on this trade or the next one or the next five? I have no idea. Not my job because I can't predict. What's my job? Play the game. Deal the cards. Stay detached. Be disciplined. Just do what I'm supposed to do. That's how I measure myself. I can't measure myself by my P&L. because the P&L is the result of doing my job and following my plan. So what's the measure? Only playing games that have an edge that favor the house, and I'm the house. If I play my game correctly. If I lose control, which happens because we're human, I'm going to make an error. And I record those errors. And I measure them. There's a tool in the Trader Lab. And I don't remember exactly. I was talking to traders in 2012 or 10 about something. And I made a terrible error in my own, trading for myself. It was one of those things where you want to hit yourself with a 2x4. And what it was is I had a lapse in focus. And we have two personality types, Jekyll and Hyde. If you heard the story of Dr. Jekyll and Hyde, Dr. Jekyll's a physician, highly regarded, professional, top line. But he'd experimented on himself, and he unleashed this emotional side called Hyde. And it was kind of like the Hulk, the TV show, I think it was called the Hulk. And this emotion would take over, and it would be rage. Well, in our case, Hyde is fight and flight, fear, greed, all that. And so I was trading, and I put a short on, and I was running a very tight stop. I got risk neutral, but I had not risk neutral, I had like 2 ticks of risk on. So I just looked at this thing, and I grabbed my stop, and I pulled it down. So I was no longer risk neutral, and I locked in, I don't know, maybe 3 ticks. The market counter rotates and takes me out. And I saved 2 ticks or 3 ticks loss. The market then dropped like 25 points. And I thought about that, and I said, what did that cost me, that error? So I ended up saving 3 ticks and gave up, it was either 20 or 30 ticks. It was just a huge move, and I timed it beautifully. But in the moment, Hyde snuck in there. And I wasn't concentrating, and I just automatically, unconsciously moved my stop. That's Hyde. Hyde is sitting on your shoulder 100% of the time, whispering in your ear. I don't know about that. Maybe you better exit here. No, I'm going to hold it. Well, what's my plan? It's got to take me out, or else I'm just going to sit here. What happens if it takes you out? Hyde's going to say, I told you so. You shoulda. You have that? That's all the lunatic under the hood, because the lunatic is really right in hindsight, but the lunatic on the other side of that's going to say, don't get long here. You don't want to take a stop. Wait for certainty. Well, you took a long here, you'd be risk neutral, and now you got to bought a ticket to ride. I think the Beatles did that one, right? And now you're just hanging out, and either if you get scaled and it comes down here, you get taken out, you scratch, and maybe they'll give you a coupon and me a coupon to the buffet. If not, then all I'm doing is in a rotational environment. You see? This is important. Can we come back and get through this obstacle right there? Because if we do, we go there and then out there. If we don't do that, we can do anything. That's Trader Lab, and that's just trading. There's nothing more to this other than randomness, which is 100% of the time. And then you take your trades, and the goal is a minimum 2-lock configuration. The idea is that the first contract buys your stop on your runner, and then you have a trade management process. So the worst that happens is you scratch the trade, assuming you get your scale, and then that's it. You scratch your trade, your broker sends you a gift basket, and you go on to the next trade. Or it comes down here. It doesn't take this out because our buyers were here, our icebergs, and then we have to see what happens. I do not put my stop here. Now, in hindsight, it might have been, wow, that would have been a smart move. I don't know that. So my plan just says it has to fail. If it comes down here, then what do I have? I'm going to be looking out here again. When I was talking about outside edges, remember, I was saying, well, the better place for this is further outside. Well, if it doesn't get there, it doesn't get there. So I'm okay taking this to come back there. If it falls outside, then I have a low volume node. So this would be the same process. In other words, if this comes out here further and takes this out, I'm going to be looking down out here because now I'm getting into low volume area, 429. So this are out here. So I'm going to be looking in this area. If I already know where my next trade is, unless everything falls apart, I'm going to be doing the same trade from a different location, not a recommendation. That's going to be outside. Back to there. Unless it all falls apart. And I have to see it. I don't just trade blindly. One moment, please, guys. Let me just take a look at a couple things. Do you have questions? One second. This is our area. Let's watch. Sell stops coming out. Buying icebergs are back in here. We're rolling out towards an outside edge, and we're still maybe thinking mean reversion. So I want to see how we behave. These are not trade recommendations now. Let's see. And we do have POTUS at 12 noon, so anything can happen here, right? Outside edge, low volume node is sitting there, right under this liquidity. So we're going to just take a look at this. It's not a recommendation. And we're going to see if there's behavior around the liquidity and the outside edge. Let's just see what happens. Liquidity is sitting here, getting absorption. We want to watch this behavior. Sellers are still doing their thing. Pretty good selling here now. We're into the liquidity. We have icebergs executing. Icebergs. Let's watch. High volume node is here. Outside edge is here. We just want to watch. Nothing to do here. I don't call trades. I'm pointing out locations of potential behavior. We have our buyers over here. Now we got to see if we get more sellers or the buyers take control, right? There, there, there. Let's see what it does. It's possible to come back and test. There's our micro high volume structure. You can see that little HVN sitting out there. Micro high volume, support area, not recommendation, outside edge LVN, high volume node is sitting over here, right there. This is the outside edge. So now we want to see, we can easily take this out, come under, and then we want to watch this behavior. Let's just watch. So this sets up a potential trigger. Now we want to see the behavior. Are the sellers still hitting it, or are we going to find our buyers here? Let's watch. Still seeing the sellers. Sellers are still doing a good job here. We need our buyers. If we're going to go up, they got to kind of show up in here, or else we're not going anywhere. If we can't get back above here, there's nothing to do. It's got to get above here, or nothing to do. Sellers are still doing a good job. We're going to watch this area. These are not trade recommendations. We're just looking at behavior. The idea is with this that when we come out to these areas, now there's a high volume node, too high. Now we have another one. We want to watch these behaviors here. outside edge. We need to clear this. This is resistance now. Let's see what happens right here. If the buyers can take the ball here, then we can proceed. But we need to get above this. Right here, you see the battle. I'm not going to be able to stay with you guys. I'm out of time. So this is the key location and the idea of this trade, not a recommendation is to come here. See what it does, okay, guys? Please give a like. I hope you got something out of this today. If you're interested in Trader Lab and learning an advanced methodology, and there is no secret sauce or holy grail, use the link in the bottom of YouTube. Visit Trader Lab. It's a serious community of like-minded traders looking to develop career plans and sustainability in this business. And of course, past performance is not indicative of future results. You have to do the work. But I'd certainly like to meet you in the Trader Lab. Come, give a thumb up, if you will, please, and a like. Appreciate you guys stopping by. If you use that link, you can download 60 PDFs of these structured trades. These are broad strokes, but you can use them to get an idea of the potential. Also, a library of webinars that are available to you. Use the link in the bottom of YouTube. There's no cost for any of this. And please give a like on the way out. And you visit the Trader Lab. There's a library of webinars. Start with the primer webinar. Ask others in the Trader Lab what webinars that might be most material. And it's a great community. I hope to see you there. Thanks again, guys. Have a super day. And remember, POTUS speaks at noon, so wear a helmet.